Starting, all attendees are in listen-only mode.
Good afternoon, everyone, and thank you for joining us today to get a high-level overview of an exposure draft that has been issued by the Auditing and Assurance Standards Board. The development of this exposure draft has been an important project for the XRB, and we started work on this 3 years ago in 2014. It provides a unique opportunity in that this is a New Zealand standard developed in New Zealand for New Zealand. So it's really important during this exposure draft period that we hear the views as to whether this exposure draft is fit for purpose and workable in New Zealand, in that it will promote consistency in practice. Please feel free to raise questions along the way during the course of the webinar, and I'll do my best to answer those. If we don't get to answer those during the webinar, we will respond to you after the event. Today's session is of interest to auditors, preparers, and users of auditors' reports. We need to hear the perspectives of all stakeholders to make sure that what auditors are doing is meeting users' needs. I'm Misha Peters. I'm a Senior Project Manager supporting the work of the Auditing Assurance Standards Board, and I'll do my best to take you through this exposure draft at a high level and look forward to hearing your feedback in due course. An outline of how we'll run the session is I'll give you a brief background to the accounting developments, as well as how we've approached this project from an assurance perspective. We'll look at the international assurance framework under which this standard must sit, and then we'll go through the key assurance challenges that have been identified during the project. Finally, we will look at how to respond. In terms of a quick background and recap in terms of our PBE Entity Framework, from a preparer's perspective, there are 4 different tiers of preparers, which is determined according to whether an entity has public accountability, according to its size and the amount of its annual expenditure. The breaking headline news is that the Tier 1 and Tier 2 financial reporting standard requiring Tier 1 and Tier 2 entities to prepare service performance information was approved yesterday at the Accounting Standards Board. So watch the space, watch your inbox for news of the issue of the preparer's requirements to prepare service performance information in the Tier 1 and Tier 2 space. That will be PBE FRS 48 and will be effective for periods beginning on or after 1 January 2021. We're well aware, though, that there may be entities who wish to early adopt that, and it is therefore very important that we finalise the audit standard before the early adoption occurs. For Tiers 3 and Tiers 4, they are the simple format reporting standards, the accrual or the cash standards. Those standards already include the requirement to report service performance information and have been in effect for periods since 1 April 2015. From an audit perspective, we don't have a tiered approach. An audit is an audit. So the auditing exposure draft is a one-size-fits-all in terms of the auditor needs to apply the same requirements regardless of the size or tier that the entity is reporting under. From an audit perspective, what's really important is the scope. So what is within the scope of the audit? And it's really important to understand the distinction between the general purpose financial report and other information that's included within an annual report. By including the requirements to report service performance information within the accounting standards, that brings both financial statement information and service performance information within the scope of the general purpose financial report. That means that entities that are legally required to have their general purpose financial report audited now means that the auditor has to look at both sets of information during their audit. So our auditing standard has to be scalable and applicable to a wide range of entities, applying different sets of accounting standards. At this point, it's important to stress that the XRB has not determined who must have their GPFR audited. That is determined in law or by other parties. What our exposure draft does is consider when service performance information is within the scope of the audit, what is the auditor expected to do? So just a quick recap as to some of the legislative requirements. In terms of the Charities Act, depending on whether your operating expenditure is over $500,000, that would mean that you're considered to be a medium-sized charity, and under law you may elect to have your general purpose financial report either audited or reviewed. If your entity is large, meaning you have expenditure over 1 million, then you are required to have your GPFR audited. How that translates in terms of our tier structure, it means that tier 1, 2, and some of tier 3 are required by law to have their GPFR audited. So the audit of service performance information is already happening. It's happened historically in the public sector for almost 2 decades or over 2 decades now. And for our tier 3 charities, there has been a requirement to have that information audited for the past 2 years. Other charities may be electing to have an audit in terms of their founding documents or may be required to do so by the providers of funds. This is the ideal opportunity to revise whether there is still the need for an audit and also to consider what is within the scope of that audit. Those requirements may refer to the financial statements, and clarification may be needed as to whether those financial statements mean and include the service performance information or not. So I just want to take a quick poll at this stage to see whether you have actually performed an audit of service performance information at this stage. So we can take a few minutes just to either show that you have or you have not yet performed a service performance engagement. Right, so there's still some answers coming in there. Right, I'll close it off now and share the results of those answers with you. So it looks like 70%, just over 70% of those on the line have already performed the audit of service performance information. And that's really encouraging to see, and it's encouraging for those that have not yet done it to know that it has been and can be done. We really look to those that have experience in the space to share your knowledge and experience with us when looking at the ED, to think, is this in line with what you're doing in current practice? For those of you who have not had the opportunity to audit this yet, but will be doing so, we're also looking for confirmation as to whether our exposure draft makes it clear as to what you have to do. So just to briefly recap on and to highlight, what are the actual accounting requirements? So the accounting requirements in both the Tier 3 and 4 space and the Tier 1 and 2 space are established by way of a requirement to answer specific questions. The questions are very similar. So Tier 3 and 4 entities have to answer, who are we? Why do we exist? And what did we do? In the new accounting standard that's just been finalised, the questions are very similar, but tweaked very slightly. and ask the questions why the entity exists, what it intends to achieve over the medium to long term, and what it has done during the period towards achieving its aims and objectives. This information can be presented in a variety of ways and does include more non-financial and more qualitative information. So to really engage with and understand what we mean by service performance information, I've looked at the example of the Fred Hollows Foundation. So in terms of meeting these questions, answering these questions in the annual report, the example here would be, so the Fred Hollows Foundation, to answer the question why the entity exists and who the entity is. The foundation works for a world where no one is needlessly blind or visually impaired. What is its goal? Its goal is to end avoidable blindness and visual impairment in the Pacific. And then what did it do in the current period? So in terms of restoring and preserving sight, if you look in the annual report, you'll see some performance measures that the entity has developed to show what it has done. And it does that in a number of ways. For example, information about the number of surgeries that have been undertaken and the number of spectacles that have been dispensed. So that's an example of how an entity might answer those questions. The other requirement is for the entity to present an appropriate and meaningful mix of performance measures and/or descriptions, which is both qualitative and quantitative measures. The entity will need to determine the appropriate performance measures in order to tell its own story. And there's a great deal of flexibility that's allowed to enable the telling of the entity-specific story. In the Tier 1 and Tier 2 standard, there includes a requirement to disclose the judgments that have been made in the selection, measurement, aggregation, and presentation of the service performance information. So in our Fred Hollows example, the appropriate and meaningful performance measures that I've sort of highlighted here, there are others that they choose, were the number of surgeries and the number of spectacles that have been dispensed. And that is up to the entity to determine what will result in the most meaningful evaluation of what it's achieved during its current period. Okay, so that's just an introduction to the webinar. I want to now delve into the assurance framework. The NZAUASB sets standards and mostly adopts international standards, and those international standards are developed under an international assurance framework. So if you look at the slide, the way that this international framework is developed is that it draws a distinction between engagements where the subject matter is historical financial information, and that's highlighted in the green on the left, and that covers audits and reviews of financial statements, really. On the orange or the yellow side, we've got other assurance engagements, and that's dealing with any other subject matter that is not historical financial information. So, for example, if somebody's opining on an entity's sustainability information, that engagement would be undertaken under the standards on the orange side of the framework. When the NZAUASB commenced this project, the first starting point was, well, where in this framework is this New Zealand standard going to sit? Back in 2015, when the board worked towards developing guidance and issued EGAU 9 to help auditors in the interim before an auditing standard was issued, that explanatory guide explained to the auditor how to apply the orange side of the framework to service performance information specifically. And that's because service performance information is often not financial information and therefore sits on the orange side of the framework. EGAU 9, however, was noted to be a stop the gap, fill the gap until we get a standard in place measure, and will be withdrawn once we have an auditing and a review standard in place. The difficulty of creating a standard on the orange side is that it means that the auditor has to apply two suites of standards. So in order to avoid that, the board was keen to try to develop a standard on the green side so that the auditor is undertaking one engagement in accordance with one suite of standards. The other reason why the exposure draft proposes to prepare an audit standard is to highlight and stress the importance that this is a concurrent engagement. It's not that the auditor is auditing the financial statements and then with a tag on looking at the service performance information, rather that the work done on one type of information can be used to support the opinion over the whole GPFR. So for that reason, the board is proposing that the standard to be developed will actually sit on the green side of the framework. So I've also got a poll, because this is the first question in the exposure draft, is to whether you actually agree with the approach of developing a standard that sits under the auditing side of the framework. Okay, so I can see some of you are starting to vote on that one. Right, I'm going to close that poll off now, and I'll share the results of that with you. So a majority agree, yes, that is an appropriate way forward. There is a percentage that says no. We're very interested to hear your reasoning behind the no. So look forward to seeing those comments come through either at our roundtables or in response to our submission, our exposure draft. Before we look at some of the assurance challenges, I thought it would be useful just to pause and give a very high-level summary of the approach taken to developing the exposure draft. And really the approach was, well, what does the auditor have to do differently in addition to what the auditor would be doing normally when auditing the historical financial information? What we've come up with is a two-step audit process. And the key difference is the introduction of step one. So as I referred to previously, the entity has much more flexibility in the way that it can choose what performance measures it wants to report about to reflect on its performance in the current year. It has to apply significant judgment to determine what service performance information to report, how to present that, and what measures to use. The auditor cannot therefore just verify the information that is reported. First, the auditor must get comfort that the criteria that the entity is using are suitable for the circumstances of that entity. And that really is an additional step in the process. So that's why we've come out with this two-step process. Step one is to evaluate the suitability of the entity's service performance criteria. And step two is then to verify the application of those criteria. Basically, at the end of the day, the auditor is required to stand back and evaluate whether the service performance information achieves fair presentation. If the underlying service performance information is not properly identified, presented, and measured, the basis of reporting is fundamentally undermined. So a key definition for our exposure draft is the definition of service performance criteria. An assurance engagement, by definition, involves an assurance practitioner expressing a conclusion about the outcome of the measurement or evaluation of an underlying subject matter against criteria. That's quite a mouthful that not many people really understand. But what it's all about is the auditor is expressing an opinion about whether the evaluation of its service performance has been done under and against the applicable criteria. Those criteria must be suitable and available to intended users in accordance with the requirements of the assurance framework. So what we've done is we've drawn off the international definition of criteria and tailored it specifically to the service performance information. We've defined it as the benchmarks used to measure or evaluate the entity's service performance. We've drawn the link here to the specific elements that are being reported, the goods and services, and the related performance measures and descriptions for the particular engagement. And it must have logical links to the entity's overall purpose and strategy and be in accordance with the principles established in the applicable financial reporting framework. So this is a really key part of our exposure draft. One of the questions is to look at whether the definition makes sense, is understandable, and whether you agree with that. So I've got another poll to see if you agree with and understand what we mean by service performance criteria. Okay, I'll close that off and share the results with you. So a majority agree that the definition makes sense, which is encouraging to know. We're heading in the right direction. If you do have any comments or feedback about how we can improve that definition or enhance its clarity, we are looking for feedback specifically on this issue. Right, the next part of the webinar deals with the real challenges that have been identified in auditing service performance information. And it answers the questions, well, what do you have to do differently? And it's largely driven by the nature of service performance information, because it does differ from traditional and historical financial information. Whilst these challenges are real, they are not insurmountable. And we encourage people to remember that this has been and is currently being done in New Zealand, and it's been done well. And it's a great opportunity to leverage off the experience that has been developed over a number of years. So what are the key assurance challenges that we've identified? We've alluded to the suitability of criteria. We'll look at materiality, understanding the entity and the control environment, some additional assertions to think about, and most significantly in terms of reporting and how we can best meet the needs of users. The first challenge is in terms of understanding how an auditor evaluates whether the entity's service performance criteria are suitable. So these are really looking at the qualitative characteristics of information. Those criteria need to be relevant in that they meet the needs of users and are clear and logically linked to the entity's purpose and strategies. In order to be audited, they need to be reliable, so capable of measurement or description, and there needs a robust and reliable collection process in place. They need to be neutral in that it must report both favourable and unfavourable aspects of performance. And this is a real risk in this space in that it's up to the entity to choose what to report. So there's a real risk of preparer bias given the amount of flexibility that's allowed. The information needs to be understandable, and that it must be coherent, logical, and concise. And then it needs to be complete. So it's covering all aspects that enable an informed assessment. Now, when you look at that list, there's actually a trade-off between some of these qualitative characteristics. And then the relative importance of these need to be weighed up. So, for example, if an entity was to report everything so as to meet the completeness factor, that may undermine the understandability, and it might mean pages and pages and pages of information, which reduces its understandability. So this is a very, very challenging aspect of auditing service performance information, and it is an area where the exposure draft focuses specifically and provides a number of application material paragraphs to assist the auditor in thinking about what factors to consider in its evaluation as to whether the criteria developed by an entity can be considered to be suitable. A key thing here, and what experience has learnt over time, is that reporting those measures that are easiest to measure does not necessarily result in an achieve fair presentation. I see there's a question, so I'm just going to find that and see if I can answer it for you. I can see it. I'll have to come back to that question. I'm afraid I can't actually see it at this point. So, oh, you can't hear me? Can you hear me now? I hope the sound is all right. If anyone else is having problems with the sound, please let me know. Yep. Okay. I believe the problem is resolved, so that's good. I think I just had my microphone slightly off center. In terms of, so just to recap where we'd left off, we'd said that there's a trade-off required between these qualitative characteristics, and that reporting those elements that are easiest to measure may not necessarily be the relevant measures, and so may not achieve fair presentation. Another factor to consider is that the reporting of service performance information is going to be new for a number of entities, specifically in the not-for-profit space. So the processes to identify and capture and report the information is going to be at various levels of maturity. A key focus of the ED is to highlight all those considerations in helping the auditor to make a consistent evaluation as to whether the criteria can be considered to be suitable. The auditor must apply professional judgment, and the kind of factors that the ED highlights is the need to really focus on the user, what information is going to be useful from a user in terms of making decisions, and factors like the extent to which stakeholder engagement or consultation has influenced the criteria that an entity selects to report, whether the performance measures are established in a performance framework. In the public sector, this stuff is often predetermined and set out in the long-term plans or in an entity's statement of intent. The other key aspect here is, and what's been important in the development of the accounting standard, is the focus on and the need for the disclosure of judgments made by the entity. It's important to understand the context as to how an entity selected what to report, and that's what the accounting standard now requires. So the next challenge that we've addressed in the exposure draft is on materiality. So in terms of assessing materiality, materiality in this aspect relates to two factors. Number one is in the selection of information. And again, this comes back down to the two-step process. Is the entity reporting the matters that really matter? Is the entity reporting the material performance information? And the second part of materiality is then, in the information that's reported, the level of misstatement in each reported result. And there's different factors that come into play when looking at service performance information as compared to financial information. So if you think back to our Fred Hollows example, the service performance information is not being reported in terms of dollar number. It's looking at the number of surgeries and the number of spectacles that have been delivered. So you may need to express materiality levels for each unit of performance that's been established, because it may not be relevant to apply a dollar value to it. And also you may need to think about materiality factors rather than materiality levels, because we're dealing with more qualitative type of information. So the exposure draft considers all of these different aspects. A key challenge for an auditor coming into an entity that's never done this before is that the entity's process may be very immature. So in terms of identifying what to report, it may not have thought about this and may get to year end and not actually have had the processes in place to capture the data that it needs. So the exposure draft encourages early communication about concerns over what an entity intends to report, enable to address concerns early and avoid an ultimate modified audit opinion. What the auditor needs to do is to understand the controls that have been in place, just like a normal audit, and then obtain evidence of the operating effectiveness. And then based on that evidence, the auditor can determine the mix of audit procedures to apply. In rare cases, it may be impossible to obtain sufficient appropriate audit evidence. In this case, the auditor would need to modify the audit opinion. And we'll touch on that under the reporting section. Another key challenge that we identified was on the assertions that are made. So while in many instances the conclusion was that we think the assertions that are made on service performance information are the same as those that are made for financial information. So occurrence, completeness, accuracy, cutoff, presentation, those are all the same. But the board has identified one additional assertion, and that is related to attribution. The assertion here is that the service performance information only includes the service performance of the entity, and that it must only include information where the entity has evidence to support its involvement. And this is really important in that in some of these spaces, there's going to be a number of entities doing a number of different things in terms of trying to make a difference. And the service performance information needs to relate specifically to what that entity is doing. And that's why we've identified this additional assertion. The final challenge, and actually probably the most important challenge identified, was about what is the audit report and opinion to look like. And this was the starting point of the project. You sort of start with the end in mind. So some key factors that the board considered in this space was that we want this to be one engagement. So we need this to have one report, and the auditor should be issuing one opinion on the entire GPFR, inclusive of both the financial and the non-financial service performance information. But it threw up a whole lot of different challenges because, well, what happens if the controls over the service performance information are so poor that the auditor can't audit the information? What does that mean for the opinion as a whole? So we needed to look at split opinions where there's a modification on the service performance information, and what does that mean for the opinion on the financial information? So there's a number of illustrative reports at the back of the exposure draft, and it does make the exposure draft a whole lot longer because it's got all these illustrative reports at the back, but it's to illustrate all the different permutations in that in some instances, a modification on some of the information would have a knock-on effect and result in a modification over the whole GPFR. In other instances, you're just going to be modifying on the service performance information and issuing a clean opinion on the financial statements. How to communicate what has been done in the audit of the service performance information? Well, there's two elements in the report where we focused on that, and that is in the description of the responsibilities of those charged with governance. And the clear thing here is that it is the entity's responsibility to determine its service performance criteria. It is up to the entity to determine what information to report and how to report it in accordance with the accounting standards. It is the responsibility of the auditor to evaluate the suitability of those criteria. So these are the different aspects that we've needed to bring in under those headings in the audit report that is issued. One fact I just want to highlight at this stage is a number of you may be and have already been referring to our XRB website's description of the auditor's responsibilities in your audit report. That's proving to be a very popular change that's been made under the auditor reporting requirements. Just a word of caution that at this stage, those responsibility sections on our website do not include the responsibilities for service performance information. So please do not include those links where your audit scope includes service performance information. Once we have issued and finalised the auditing standard, then you'll be able to make that link. The exposure draft also looks at and acknowledges that service performance information is new and is a developing area. So the board was determined to consider whether more flexibility may be permitted. The ED requires that a minimum short form audit report be produced, and that's our normal opinion, and doesn't necessarily include information about the procedures the auditor performed, the findings the auditor found, and information about the criteria. But in this instance, the board thought that it may be useful in some instances for the auditor to include more information. So while the short form is required, the ED permits more information to be included. And the types of information that an auditor might think of including is more information about and identifying the service performance criteria, where the source of those criteria, if they sort of cross-refer to a statement of intent or other performance framework, any interpretation that is made in selecting or applying the criteria, and also the findings. Another really interesting aspect is under the new auditing standards, there is a requirement for some entities for the auditor's report to include key audit matters. And key audit matters are those matters that were of most significance in the audit of that financial year. Now, the exposure draft covers that and says, well, if the auditor is reporting key audit matters, then the service performance information may be identified as a key audit matter if, in the auditor's judgment, the service performance information was the most significant matter in that year's audit. And really interesting, we've seen voluntary adopters in the public sector issuing CAM reports, and in the Auckland Council's annual report this year, there is an example of a service performance information key audit matter. So that's an example. It can and does happen, and our exposure draft notes when it would be appropriate. One of the most important aspects of our exposure draft is looking at the opinion. So in this slide, I've illustrated what we talk about in our exposure draft as the preferred opinion. It's been an incredible challenge for the board to come up with the most meaningful way for an auditor to opine on the whole GPFR. So the preferred position in the exposure draft is to issue an opinion over whether the financial report presents fairly, the financial position and financial performance, and the service performance for the year then ended in accordance with the appropriate accounting standards. This illustrative opinion differs slightly from the approach that we took in EGAU 9. So in EGAU 9, the guidance illustrated an opinion where the auditor opined explicitly on the suitability of the criteria. So it had a part A and a part B, and the part A is where the auditor explicitly opines on whether the criteria was suitable. Now, this is not necessarily needed in most assurance engagements because by definition, you cannot accept an assurance engagement where the criteria are not considered to be suitable. It's an unusual situation in this instance where the GPFR covers both the financial and the service performance information, where it could be that the auditor would still continue the engagement and provide an opinion on the financial statement information, but conclude that the criteria used for the service performance information were not suitable. So in terms of developing the guidance in EGAU 9, the approach was to explicitly opine. Where we've landed, if we go back to the previous slide, is that the explicit opinion is not needed, but as long as that information is is clearly expressed in the description of the auditor's responsibilities, it's not needed in the opinion itself. And it may actually make the opinion cluttered and more confusing for the user. So that's option 1, the preferred option, and that's the alternative option. So this is a key matter that we're looking for feedback on, and I'd really like to see whether you agree with where we've got to. So I'm going to launch another poll, which asks the question whether you agree with the preferred approach. So that's the slide before. What if I can change that? Oh, I'm going the wrong way now. There we go. So do you prefer option 1 or option 2? Yeah, the votes are still coming in, so I'll leave it open for a little bit longer. Okay, close that off and I'll share the results with you. So you can see that a majority agrees with, 81% agrees with and prefers option 1. 5% says neither. Be really interested to know if you've got any suggestions for improvements and how we could further clarify that opinion. So please share those views with us. I believe there is a question, so I'm just going to see if I can find that. So the question that is here is, do we issue any opinion over the entity information for Tier 3 statutory audits? That's a really good question, and it is covered in our EGAU 9. So again, legally for Tier 3 entities, the whole performance report is subject to the scope of the audit if there is a legal requirement for an audit, assuming it's on the high end of the Tier 3 scale. So you do need to opine over the entire performance report, which includes the entity information. So that might be an additional illustrative report that we need to add in when we finalise the standard. So it would be a good good feedback to provide to our board that an illustration that includes all aspects of a performance report should be captured, because I don't think we've done that at this point. Okay, so in terms of the effective date of the exposure draft, the proposal is to align with the effective date of the Tier 1 and Tier 2 accounting standard. So breaking news, the standard's going to be effective for, the preparation requirements are going to be mandatory for periods beginning on or after 1 January 2021, and that can be early adopted. So similarly, the auditing standard, it's proposed to match that effective date. The next part of this project is going to be to develop a review standard. So we are also looking at feedback as to what would differ between an audit engagement and a review engagement. And once we have finalized the review engagement standard, that is when EGAU 9 will be withdrawn. So how to respond? Our invitation to comment is up on our website, and I encourage you please to go and have a look at that if you've not done so already. So this webinar today is our first outreach on our exposure draft, which is going to be followed up with roundtable discussions. So you've patiently sat and listened to me carry on for an hour about what's in our exposure draft, but what's really important is that we hear your views. So we really do need to hear those, and we encourage you to register. You can still do so online for roundtable discussions in Christchurch, Auckland and Wellington. It might save you time. If you come to those, you don't need to formally submit anything to us. We'll be able to capture your views at the roundtable discussions, and it'll be really beneficial to hear those views from our perspective. The submission comment period is closing on the 20th of December. So it's before you go away on your Christmas break. The key aspects or areas where feedback is sought is on the appropriateness of our two-step approach, on whether the guidance on the evaluation of the suitability of the service performance criteria is workable and will promote consistency in practice. On those assertions, so we looked at the additional assertion that the board identified. We're asking the question as to whether there's any other assertions and to whether the ones that we've identified are all appropriate. One aspect we haven't discussed today is on the use of experts and other practitioners. The introduction of additional types of information may increase the need for and use of experts and other practitioners. Then we've covered the auditor reporting requirements. There's a number of questions and really important that we hear the feedback of all stakeholders in terms of the reporting requirements. And then also looking for feedback on how an audit would differ from a review engagement so that we can set up for the next phase of the project. So I don't think there's any more outstanding questions. I'd like to really thank you for your time this afternoon, for joining us and listening in and showing an interest in a very important exposure draft from the XRB perspective. Please do come and talk to us at our roundtables, and we look forward to hearing your views or your submissions. So thank you very much.